Rakesh Kumar Jain, Director of Finance with Gail, joins us now. Mr. Jain, good morning. Thank you for joining us. Now, oil has been really volatile of late, but right now it has fallen by nearly $20. Does that mean that LPG prices also will start falling, and will the business continue to report losses for even few more quarters?
LPG price have in last few months come up, and in particularly winter season the prices become more stable and rather it increases. So we as a company don't expect that prices to go down, will remain in a current range or maybe somewhat higher than the current range.
This quarter, the LPG segment reported, and so you are saying prices have increased. Does that mean the segment will report profit?
Yes, previous quarter we were in loss because LPG prices went significantly down. It was unexpectedly down. Since then prices have gone up, and currently prices are in upward trend.
Right now, for the last 5 quarters, the petrochemical business has been reporting losses, and channel checks as well indicate that the down cycle is continuing and that profitability chances are bleak even in the third quarter. When internally are you expecting a turnaround in the petrochemical segment?
Yes, it has been tough time for petrochemical business, and if you are talking about 5 quarters, it has also impact of last year's input gas prices, which were higher because of the geopolitical situations. Since then, the input gas prices have cooled off, but say at the same time, the petrochemical prices have also gone down. Last 6 months were really tough, but then now prices, polymer prices have stabilized and input prices have gone down. So what we expect at least in the 6 months, and we will be in break even, or we expect that even on yearly basis we will be far better than what we were in first 6 months.
Right. So are you confident then that FY25 will be profitable for the petchem segment?
Yeah. We expect that the next financial year we will be in positives, because as I said that gas price, which is input for petrochemical at our Pata petrochemical complex, has cooled off, and the polymer prices have stabilized. If I have to share that currently we are producing polymer at the rate of 100%, because demand is significantly increased in past few weeks, at least I can say.
I also want to understand about the transmission volumes. Has there been a dip in the third quarter?
Currently, the transmission volume are hovering in the range of 119 to 122, depends on particular day. And the transmission volume has rather gone up if you compare with last year. Last year average volume was 107 MMSCMD. Which on an average basis are currently 119, and we expect these volumes to further go up to 123 when we at exit volume in March 24.
Right, and any updates on the tariff revision that you filed earlier?
So, soon after the announcement of tariff and its implementation in April, we filed the review petition with PNGRB. Essentially there were many reasons, but one of the major reason for reduction in tariff by PNGRB was non-consideration of the price which we filed. In fact, they considered APM price at the rate of $3.61 per MMBTU, and also the HPHT price around $7, which in fact is significantly lower than the current prices. If you see, APM prices are $6.5 per MMBTU, and HPHT prices are around 12.5. So we asked PNGRB for review of the tariff, which inter alia includes the various issues including the gas price. So we expect PNGRB to take decision very soon in this regard, and we are expecting for their review and final decision.
What are the current tariffs and how much is the company asking for it in review?
Yeah, we filed the tariff around 68 rupees per MMBTU, and when PNGRB notified the tariff, it was around 58, 59 rupees. So essentially there was a reduction of around 8 to 9 rupees, and which primarily includes the gas reduction on account of gas price, which is around 5 rupees 76 paisa, and remaining on other accounts like moderation of capex, consideration of higher capacities. So this is the difference between our filing and the final approval by PNGRB.
The gas trading business has been reporting strong numbers. Do you expect a drop in profitability because of the drop in crude prices? How should one look at the profitability of this business?
Last year's volume marketed by us in domestic market was around 83 MMSCMD, which has gone up to 93 MMSCMD plus in current financial year, and there is a significant, and we expect it to grow further. In terms of average volume supplied marketed by us last year was 94, and we expect that when we exit on 31st March it will be around 100 MMSCMD. So all these factors have enabled GAIL's marketing margin to increase, and we have given guidance when we met on earning calls or with investors. We said that in whatever situations happens, we will earn at least 3,500 crore rupees as profit before tax in this segment. But we are reviewing our guidance because we have almost touched these figures in this 6 months. So we are reviewing our guidance. Will come back when we end this quarter. So we are optimistic that at least we'll be beating our projections significantly. And in terms of next year, we expect that at least on I can say at least we'll earn 4,000 crore rupees at profit before tax from this segment.
So what is the current status of the LNG supply from Gazprom, and what are the chances of winning the arbitrations that GAIL has filed?
And currently we are getting the volumes in terms of the contract. Regarding chances, we have filed the case claim of almost $1.8 billion in the London Court of Arbitration. This is our claim, and also the remedies, which include supply of volumes and non-monetary. So we are at this stage, we cannot say anything, but we have taken the legal course. That's what I can say.
Right. So when it comes to the CGD business of GAIL, there's been a lot of chatter around the fact that given it's a non-core business, GAIL might consider selling this business eventually. How true is that? And could you consider a sale in the future?
At least I don't know from where this news comes that we will hire off this business. This is a good business for us, and for that purpose, we have created 100% subsidiary GAIL Gas, which is looking after the retail business. So currently we are focusing on increase of reach of gas to consumers, including in the city gas distribution. We are putting up lot of money. Rather, we have planned to incur almost 200 crore rupees per annum for coming 6 years to meet the minimum work program. So we are working on the expansion of these CGD networks, and there is nothing there in our mind that we are looking for high of this business.
All right, appreciate you taking the time out and giving us a sense as to how your overall business is shaping up, and that's the take coming in from the management of GAIL.